That is always the trick when it comes to the facilitator's role in executing on an activity is that like it can be fun and it can get the team engaged in the session and get them to sort of, be present in the work and in the meeting. But like it's even more impactful and even more meaningful when you can then make the connection between the activity and the bigger picture of the organization. Like
Yeah.
and sometimes they do that for you, like you open it up to them and you ask them how they feel this represents their work at the credit union, but sometimes you have to drive that point home yourself. But the great thing about that exercise is there are so many examples, so many metaphors that you can draw from, and it really becomes clear, how it's relevant to to being part of a team and doing work for an organization. So it's great. It's really, really great.
Thank you
Um,
for helping, creating that, sharing it with me. Again, it's the first time that on my own, I mean, more than 500 strategic planning sessions that we did an activity. And it's one of those, why haven't I done this before? And it goes back to what are you comfortable with, right? I'm
yeah,
comfortable in
yeah.
diving into strategy, looking for new and better learning techniques to help engage more people has been very valuable.
Well, I tell you, I feel very honored that I was able to contribute something to Scott Butterfield's style of facilitation, right? I mean, you're sort of the guru in the space, and so that the fact that you took something, that's a pretty big feather in my cap. I feel pretty good about
Oh,
that. I'll be
it's
honest with you.
now part of what we do, and yeah, thank you for that and kind words. But yeah, well, we always have to be willing. We can preach it to our clients and say, you got to step out of your comfort zone. You got to try new stuff. But the reality is, most of us hate change, and that growth comes from all of us trying new stuff. How can we do it better?
Well, let me formally introduce you to the podcast here. So, I think as the folks who have been listening along know, this is the brand new Credit Union Nation podcast, and I am Tom Saycash, and I am a strategic consulting officer for your credit union partner. And I am happy to be joined by the founder and principal of that company, your credit union partner, Scott Butterfield. Welcome to the pod, as they say.
Thank you very much. Excited for this to be happening and at a time when so many credit unions are looking for insights. They're looking to improve their credit union, grow their credit union. There are, a lot of small credit unions, medium-sized credit unions that, frankly, a lot that are doing very, very well, and they're looking, how do I get to that next step? And how can I learn from what, you know, I can learn an activity from you and now put it into place. Where can I learn some of these tools that can help us grow? And then there's those that are struggling or they're holding on, but they're not going to the next level. And so having a podcast, having people that we know that Tom, are trustworthy, their heads in the right place, their motives are in the right place, and we can get these products and services and ideas, just ideas, to more people that will take it and put them to work. So I'm so excited for this. I'm excited for the things that our friends, credit union friends, are going to learn
Yeah.
from these podcasts. And I can't think of a better person to do it than you, bud.
Oh, wow. Well, I appreciate that. I appreciate that. And I haven't talked too much about kind of the purpose and sort of like what the theme of the podcast is, but it really is to share those things that credit unions are doing with as many people as we can. Back when I worked for the National Association, like I met a lot of people. I mean, I met hundreds of leaders of credit unions, hundreds of non-credit union people like business partners, who helped credit unions, regulators. I mean, I sort of being in that role just gave me a lot of exposure to a lot of people and a lot of ideas. And so when I worked for the association, I felt like that was sort of my superpower, or the thing that I could do that would make the biggest impact on credit unions, was to try to be like that facilitator of ideas, to be a connector between credit unions. If I hear one credit union is struggling with something and I know of another credit union who has solved that issue, it makes all the sense in the world to try to connect those credit unions together. And so, not being at the association anymore, but still having so many friendships and so many people that I still know and stay in touch with, like, this seemed like such a perfect sort of evolution and extension of that work. And just, trying to continue to help credit unions in any way that we can. And so that's really what this is about, is, having fun conversations and talking to my peeps and my friends, and, trying to,
Your
stay in touch
huge
on a
fan
personal level.
club.
Yeah.
Yeah, your huge fan
Yeah,
club.
right. Yeah, I guess so, but also it's to, continue facilitating those ideas and trying to share the good things that are happening in this space. And speaking of that, I feel like I know quite a bit, and, have met a lot of great people, but probably not as many as you have, Scott. And so, we are at the tail end now of the 2024 year, and this is sort of the tail end also of strategic planning season. And you've been on the road a ton. I've been on the road not quite as much as you, but still, seen my fair share of airplane miles as well, doing planning sessions for credit unions. So I wanted to hear from you. How are you feeling? What are you hearing from credit union boards about their concerns, or what are their big plans that you're excited about when you've been facilitating these sessions?
Okay, yeah, well, you are right. It was just I literally got home Sunday from my last trip, business trip of the year in Connecticut, and I think I'm in together. I think you and I are over 40 for planning sessions this year. I think I hit 36 or 37 um, during 2024, and yeah, it gives you and I the opportunity to we're like and you wrote an article this year and for the 2024 CUNA e-scan, which was awesome. I've shared it with a lot of people. But I think you and I are like walking e-scans because we're in all these credit unions, right? And
Yeah.
and we do like to do at the end of the year. If I were to sum up 2024, it was it on one hand, it's very inspiring. And it's one of the reasons when I do this that people say, Scott, why do you do this? It's a lot of work. Wouldn't you rather be home with your family? And I do it because I get inspired and I leave credit unions. Fired up about what they're focused on and what they're doing. And we approach planning a lot different, I think, than some. We don't just going to do an environmental review with our clients. We're looking at what ideas can we bring to you, best practices, can we bring to you to help you overcome some challenges or help you figure out to grow. And when you do that with people, it's inspiring to see a group of people say, okay, we're going to overcome these previously held beliefs, and we're going to look at this thing different. We're going to prioritize resources, and we're going to double down on our mission and vision. And I had that theme throughout the year. I left so many planning sessions, Tom, where I was just so excited, wanting to tell people, oh my gosh, look at what this credit union's done in the past year. I mean, there were some
Yeah.
small credit unions that during the planning session where we're looking at their trends or their organic membership growth trends. Like recently, I was just at Members Credit Union, we were talking about in the beginning. Um, membership growth, organic membership growth, 5 or 6%. 5 years for a $43 million credit union, 5 years of organic membership growth. We had our planning session in their new building, the first building they've actually owned in their 80 years existence.
Yeah.
And you leave that meeting like, oh, wow, this is as good as it gets, right? And I could give you a
Yeah.
long list of just credit unions, small and mid-sized credit unions that are just kicking butt and taking names. And
Yeah. Yeah.
that lifts me up, and that gives me more to share with more credit unions. But there, I have to be honest, there were a few this year that, I left the meeting worried. The
Mm-hmm.
meeting worried that either one, the credit union kind of knows what they need to do, but they don't have the resources to do it
Yep.
without making some drastic changes.
Sure. Yeah.
I didn't think leave any that I thought it was absolute, there's no way they could do it, but I did leave some thinking, I don't know if their current team or the board would support it, or they would be willing to make some of the sacrifices you have to make to do it.
Hmm.
Um, the so you leave those kind of with the gut punch of, I'm trying to give you everything I can. And also, I believe that when you and I go out to people and we do our planning sessions, they're paying for us to be honest. And
Yep.
that means if something is bad, it's bad. And sharing
Right.
it and why, because our goal is to help them overcome those things. So we had a few of those, and honestly, I think when we look at the consolidation that we talked a lot about during the planning session, I think is going to continue to be high. I
Yep.
think I absolutely passionately disagree with those people in our industry that say there's no place for small credit unions. It's wrong. We get to work with credit unions that are growing. We've for years have worked with Terry Robinson. She's going to receive the Herb Wagner Award in a
Yeah.
couple of months, and
The first guest of the podcast was Terry
Terry,
Robinson. Yeah.
awesome,
Yeah.
as
Yeah.
it should be. Um,
Right.
and so they're not going away, but small credit unions, mid-sized credit unions do need to grow, and they become large credit unions over time. Now,
Hmm.
there are some small credit unions and mid-sized credit unions that I think will be gone unless they're able to really prioritize and make some changes they need to do to overcome. So that's the big picture. Common themes, of course, we work with a lot of credit unions focused on community development.
Yep.
Um, and those conversations, the origins of those conversations usually come out of, we're having organic growth challenges. Are there some communities within our potential field of membership that we can grow? So we've had a lot of those conversations that include, how do we market and serve a new community, geographic, race and ethnicity, age, blue collar, white collar. Um, how can we find that group and really become relevant to them? And so a lot of strategies about what credit unions are doing to pursue and become more effective in the market. Um, there's obviously concerns and focus over succession planning, making sure that
Yep.
teams have, you've got your planning succession, and there still remains fear about fee and other income reductions. So we had a lot of conversations about that. Um, Human resource development, big issue. So credit
Oh
unions
yeah.
for those opportunities. I feel like another inspiring part of this year, mission vision statements are getting better.
Okay.
And I think maybe I was thinking about this on the flight that, I know that this is something that you, and when you were at ACU, and I know some of the leagues and some other folks out there, we certainly have been doing it for a long time, talking about purpose and the why.
Yeah.
In
Yeah.
fact, I was at Hank Baum's credit union last week, Mutual Security Credit Union, and they are doing amazing stuff in their community. Well, Hank suggested, we were talking about their new mission vision statement. It's amazing. They worked on this a couple of years ago. It's really, really, community focused. It doesn't have all of the, we're going to make lots of money and we're going to pay our shareholders, and it's really focused on meaningful outcomes and meaningful investments are what they're going to do. Well, Hank suggested during the planning session, and this is about a $400 million credit union, that why don't we, and I'm sharing this because I don't think he would mind. He said, I wanna just touch base on where we've come from. And so he sent me their mission vision statement from 2015.
Okay.
When we compared that, which was basically, we want to be the top 10 credit unions in our market. We want to be safe and sound, return dividends back to our members. And that was
Right.
like it. And so we shared that, and then we shared the new purpose-driven mission statement. And it was kind of, could go back to the balloon activity analogy. It was like, okay, so what were the changes, and what has changed because we changed our mission, vision, purpose statement?
Yeah.
And you start looking at what they've invested in the community, who they're serving, changes in policies and outreach, um, investments. All of that has changed because they got a mission statement that now is very, very different, from very bank-like, sterile mission vision to, and no one could remember, to something that is meaningful and clearly different and better in the financial service spaces. So, I mean, that was a lot of fun this year. But
Yeah.
that, we work with so many that are growing and doing well. Um, they've got good niche markets. They are using professional marketing. They've got a culture that is
Mm.
loan focused and loan driven. And I see it at the board, in the boardroom. I see it at member facing staff, a culture of doing loans. I mean, some are pursuing those different ways, but that's what's working. And there's some fear with the new administration coming in. On one hand, um, I actually made it through this year without getting political with any of these conversations, but we did have conversations. Okay, what will change with, the same administration, Democrats stay in or Republicans take over the administration, and went through pros and cons of both. Um, and there is concern. We work with a lot of community development credit unions and specifically serve immigrant communities. There is some concern right now of, what happens for those hundreds and hundreds of credit unions that serve immigrant communities. Um,
Right.
and, talking about, okay, taking it back to you, what's your mission vision? Is your mission vision just for a 4-year term administration, or is it who you are? Let that guide you, but also be very, very cognizant of what your members are experiencing or afraid of. The same with inflation, right?
Yeah.
Let's be cognizant of what's happened to the inflation for your members, and let's be there for them. So a lot of those conversations this past year. And finally, I hit the Delta million miler mark this
Oh
year.
man,
So,
congratulations.
I know I got a hug from a flight attendant the other day to welcome to the club. And but what's
That
fun
comes
is
with it.
I've
You get a
got
hug, right?
friends.
That
Yeah,
that's nice.
I've
You
got
know,
friends
that's
on that are like 5 million milers, so it's not that
oh
big a deal.
wow.
It
Okay.
is
Yeah.
it is a lot. And
Yeah. That's an underrated perk, I would say. I mean, the travel, as you know, traveling is like kind of a pain sometimes. Although I feel like this year it got better. I was just reading an article, I think in the New York Times, and it was a Q&A with Pete Buttigieg,
mm,
who has been the Secretary of Transportation for the past 4 years and oversees the FAA, and like a lot of the things that his agency tackled were centered on sort of like the customer experience.
mhm.
Both like the experience when you're going through, but also like when you buy your tickets, making sure everything is disclosed and transparency. And um, you know, I hadn't really been thinking about it, but like I feel a lot of those things. I thought he did a pretty good job. Not to be partisan in any case, in any way, but Pete, Mayor Pete, he ran a good ship. I think he ran a pretty good ship.
I
Like
think
I
he did
definitely felt
too.
like the flying experience was less painful this year than it has been in recent time. I don't know if you felt that.
I agree, and I know that there are going to be people that hear this, and that Delta or American or United or someone left them stranded somewhere, and I feel for those things, and baggage and lost, and those things are out there. But as someone who spent a third of the year in the air, um, with much higher traffic volume that is out
Yeah.
there,
Yep.
I think that yeah, I think it was better. Um, Now, can it improve? Absolutely. And I'll tell you, it looks at it as have there been times with I'm loyal to Delta and Diet Coke. Those are my two brands. And Diet Coke has never let me down, but Delta a couple of times has let me down. But I felt like they always, um, I feel like they did a fair job of trying to make him better, right?
Hmm.
Sometimes
Hmm.
there's times they failed, but overall, I wish credit unions could learn from the airlines. We have members that have been with us for credit union members been with us for 40 years. They've had a home loan,
I love
four
how you're
auto.
always bringing it back to credit union strategy, Scott. Like
Yeah, well, it's
that is
what we
perfect.
live,
That is
right?
perfect.
It's like when I hit my million miler and they're saying we appreciate all you've spent money and time with us and you've hit this milestone and now we're going to give you these extra things. And I was thinking about, how many members have we had that have borrowed from us for decades, and now their
Mhm.
kids are with us. I wish credit unions calculated what was the lifetime value of that member. Delta knows what the lifetime value is of me.
Yeah,
Other than
that's
they
right.
may not know who I've referred, but they know how much I've spent with them to the penny. It'd be
Right.
great
Yep.
to know that when our members hit this certain thing, that we had something meaningful for them. We don't. We don't. It's just thank you for the loan. And they come back, and that's why we get upset. People's like, well, I've been with your organization for 25 years. I've had 3 loans, and you're not going to waive this fee for me?
Right.
Serious?
Yeah.
Right?
Yeah.
You're not gonna hurt me when I've gone through a challenge. I'm going through a temporary challenge when I've spent $50,000 in interest with you over the last 10 years or however
Mhm.
many years. So anyway, there's a travel analogy for you. Credit is
I
we can
love that.
learn from airlines and big companies.
I think that's really true, and I think that Delta. I love Delta too. Delta has a lot of flights from Madison to different places. I will say that a lot of the planning sessions I did this year were not in places where Delta was convenient to fly, which was kind of a bummer because I'm a Delta loyal customer as well. And I think one of the things that sort of stands apart with Delta is just like the overall experience. Like it just feels smoother. It feels like things typically go the way that you think that they should go. There are not a lot of issues, delays, lost bags. And there's just some sort of like elevated level of customer service and
Mhm.
experience that you feel when you fly Delta. That's just my feeling. It's sort of hard to compare, and I don't dwell a lot on it, I guess, but I mean, it does feel like a nicer experience when you're flying Delta. And I think that when you try to compare it to credit unions, credit unions at the end of the day are sort of an experience business too.
Yeah,
When someone's coming to you to open up an account or to take out a loan, they want a seamless process with very few issues, similar to what they would want to experience when going on a flight. And so, something that I've been kind of sharing with a lot of boards and credit unions is, making greater investments in that member experience and that customer experience, because I
yeah,
think that's a way to differentiate yourself, or at least to keep yourself on par with other financial institutions who are making huge investments in that member experience. I kind of feel like the credit union product or like tangible product is the experience that someone goes through when they access one of your products and services. Like the experience of going on your website and applying for a loan, going through the process with a loan officer, signing the documents, getting the funding, buying the car. That's the product that credit unions provide their members, right? And products, in my opinion, are really what drive consumer behavior. Like people love brands. People are loyal to Apple and to Google or whatever. And I think that there's some sort of element of like status and whatever coolness of associating yourself with the brand, but what people are really drawn to are the products that they provide. People love Apple
absolutely.
because they love iPhones or they love iPads. People love Google or have used Google forever because Google provides the best product, in at least they have for a long time provided the best product in the search space. And so I do really believe, and this is something credit unions I think should think about, that products are what drive consumer behavior. And if your product as an organization is the experience that you provide your members when they come to you for financial services, making investments and making that process and that member experience as good as you possibly can make it, it just seems like really well place to put your money and your investment. And so I think that's a good lesson. You know, one thing that I've done at the beginning of planning sessions is asked credit union boards to sort of think about what their best products and services are, or you know, the places where they think they excel in member service, just so that they're thinking about, you know, the member experience, because I do think it's really really important. Is there anything that you feel like credit unions should be doing more of that you're not seeing, you know, at some of the credit unions that you've been doing planning sessions with? Is there something where you're like, if you guys took this leap or if you made this investment, you know, a big deal for you?
Yeah, it's um, if they would do a better job of prioritizing and being willing to stop doing certain things or discontinuing certain products that no longer
Mm,
relevant, legacy branches that I think if more, that's number one is, uh, I mean, whether it's for smaller mid-sized credit card portfolios that we put all this time and money into, and our balances don't grow, they're small. Why are we worried about credit card fraud and all the other stuff when we could be focusing on doing something different? Branches that the management team could tell you we got to close this sucker. It's a drain and on resources and our focus, but you got a couple of board members like, no, that's our legacy branch. We're not going to close it. So that's the thing. Also included in that is sometimes people are an obstacle, and
mm,
we tend to hold on to folks that are actually um, maybe they were really good at X, but they're roadblocks to progress, and we got to get rid of those roadblocks. Small credits, especially, there's less forgiveness. We got to get the right thing. And number two is,
right,
um,
right.
honestly, I don't know how a small and mid-sized credit union um, can grow a niche market without being expert at risk-based lenders. They've got to
Mm,
have the expertise. And I think there are a lot of credit unions that think, oh, we're good at that. We're good at that. But when you look at the numbers, they're not approving that many loans. I don't see it in their loan yield. And then when we peel back the onion, we find that, maybe there's concern with a couple of board members, or someone on the lending team that went through a bad audit 20 years ago, and they're just
right.
petrified of exceptions. Um, if people ask me all this time, what are your best performing small to mid-sized credit unions? 100%, they are expert risk-based lenders, and they don't just go through training once and that they're there. They're always looking at their underwriting. Are there more loans we could do? What can we learn from these loans and tweaking it? Um, we cannot afford to be prime only lenders in the small to mid-sized market. There's just too much competition.
Yeah, yeah, very hard to win for a smaller credit union, right? Like, so yes, I was just espousing this idea that you need to try to be like a fintech or big bank with your member experience. That's like in an ideal world, and I do think for a smaller credit union that is very challenging to do, because you have these huge financial institutions, especially if you're competing with them in your market, who are investing billions of dollars into, you know, their architecture and the technology offerings that they have to improve and optimize the member experience or the customer experience. And that is an extremely difficult thing to compete against. And I'm not saying that you can't, you know, at least, you know, bring yourself up to an acceptable level where, you know, you are providing a good enough experience that members will still consider using you. But as far as how you win in a market or how you differentiate yourself, to your point, you know, you have to do things like find that blue ocean and, you know, find the you know, find people who aren't being served by a traditional financial institution and serve them. And oftentimes it is, you know, low income folks, folks with, more checkered credit histories, and people who take more time to lend to. And again, to your point, if you can figure out how to, work your policies in a way and train up your lending staff, to be able to make those loans and underwrite loans to people with lower credit scores, that can be your differentiator and can really help you stand out and help you grow as a credit union. I do think that one thing that I experience, and I'm sure you've seen this a million times over the course of, your career doing this work, is the trepidation and the wariness and the unwillingness to take on the risk. And I think that's probably the thing that I struggle with the most, is how to sort of compel someone to see the bigger picture. And I'm curious to know what strategies you use when you're talking to a board who is not familiar with that space, or who is new to that space, and who is voicing concerns about, risk-based lending and serving, CD&E paper. Like what works to sort of get them to kind of wrap their minds around it? And then, what are some of the sort of like the trainings and things that a credit union can implement to start doing that work, once they've made the decision that this is something that they can handle?
Yeah, and we've had many of these conversations over the years, and I'll tell you, the credit unions that went through the thought process, were willing to look and invest, and then put the training to practice, successful. Then there's those that peaked, looked, they still couldn't overcome that fear, and they nothing happened, of course. But how I think the best way to approach it, one is it usually comes up because we're doing in planning, we're looking at, well, geez, you really haven't been growing organically. And let's say it's a credit union that's been in indirect, and maybe indirect lending is maybe their concentration of how many loans are there is getting pretty high, and their yields are down, and they're like, geez, we it's okay if we grow in indirect, but if we pulled out indirect, we would not be growing loans, we would not be growing members. And so that's a problem. And I like to point out to the board, that's a problem, because as a business, well, and we all know indirect is incredibly difficult to cross sell. I think of indirect as an investment, right? It's an
Yeah,
investment, it's going to pay off. It just, don't invest a lot of money there, and it's not organic growth. More likely to stay with the credit union. So what will happen is
right,
we'll say, geez, without indirect, our loan growth is stale, it's stagnant,
right.
right? Meanwhile,
Yep,
our peers have been growing loans like this, and we're flat. Membership's been flat or negative, and credit unions are like, well, we don't really focus on the number of net members, it's the activity. It's like, well, imagine being a restaurant and you're not consistently attracting new people to come to the restaurant. If you don't,
right.
the people that do come are going to get bored with your menu, your service, and you're not. So you've got to be bringing new people in. And so once we start there, and board understands, look, these are the challenges with our strategies. We've got to find new members. Um, one of our clients is Sharon. I'm trying to remember who did it. I think it was uh, I'm not sure. Anyway, I don't want to get it wrong. Um, Talked about their member succession plan, and so
Mhm.
we have a board succession plan. We've got
Yeah, I love that
then
term.
what about the member succession plan? Who are those next members going to be? And so you have the conversation with the board of management, and it will start with, well, we need young borrowers, young members. Okay, which ones?
Yeah,
Are they
right.
coming out of, Ivy League schools and going to, are they coming through tech schools? Are they not going to high school? Where are they? What's their economic background? Where, geography, all of those things. And then what you find is, okay, what are the needs there? And for instance, young people are more likely to have credit challenges than older people.
Yeah, sure.
Or, okay, well, people with 800 credit score can go anywhere on the planet. You're not doing anything special for them lending to them. They're going to get it. But
Yeah,
those people starting out that maybe have thin credit profiles, they need someone that will look a little deeper and listen to them and help them. And so you start walking through the process, and it helps them understand, okay, we see opportunity in a market here. Then we get to a point, what skill sets do we lack to be able to do that? There's amazing LSI. Rex Johnson's lending school is the best that I've ever seen. There are other credit
Yeah.
unions that you and I refer people to that are experts at it. They got to learn it. They got to have set a tone. The board has to set a tone that we are not going to govern by delinquency and charge-off ratios. We're going to govern by purpose. Loan officers need to trust, and this is employee development, right? That the board is serious. Your employee, you're not going to get fired if we repossess one of your RV loans. Um,
Right. Yeah.
you got
Yeah.
to have that, and it takes time to build it. But once you build it, you're now approving a lot more loans. Those members are more loyal. They're going to refer more
Yep.
people, and the
Yep.
yield on those loans, you say you get commission and margin. So it is for credit unions that are not good at it. It's like getting in a whole new business line. Lots of training, lots of practice. You're going to make some mistakes. The version 2.0 is going to be better than 1.0, but you have to move there. You know,
Yeah. Yeah.
where are they going to grow loans? Um,
Yeah.
who are they going to compete with? And then I like to ask, okay, so what if we don't do risk-based lending? What are the other options? We're already into indirect, and if you're a small credit union, I'm not recommending you're getting into direct. Well, we'll
Hmm.
try to
Hmm.
grow our credit card portfolio. Okay, you're competing against what those institutions spent billions on rewards. We're going to get in the mortgage business. Okay, there's already a very competitive market. How long will it take you to get the expertise to do that? Well, what about business loans? Okay, well, you got to have a successful business underwriter. And so at the end of the day, for a lot of smaller credit unions, I think all credit unions, is are we willing to overlook the people with thin credit profiles, or their
Mm.
credit's always been a C? It probably will always be a C, but why not? And
Right.
they're going to pay us first. Why not? Why not do
Yeah.
that? So it's a
Yeah. Yeah.
process. It's risk. It's change. It's a new direction. But um, that's why I again, time and time again, think of the credit unions that I know that you respect so much. They're good risk-based lenders.
That's right. Yeah. Yeah. Absolutely. Yeah. And then ultimately, it's the right thing to do. I mean, we think about working in an industry, and it's funny how at the end of each of these episodes, it sort of has always come back to the original purpose of credit unions. And I think that's another secret sauce, or another secret element to a successful credit union, is trying to remember why credit unions were formed to begin with, and trying to emulate that model. Because to your point, those credit unions that are trying to extend credit to places and to people and to communities where traditional financial services has sort of gone away, like those credit unions are doing really well. I mean, that's how credit unions were formed. Go read the history about St. Mary's Bank Credit Union and why they were formed here in the United States, and that was the exact reason why that credit union was formed. And so going back to your roots is definitely a success strategy. And Scott, kudos to you for sharing that and evangelizing that for so long, because it has helped credit unions grow and remain successful and viable for a long time. And it has also helped a whole hell of a lot of people. And so, you should be commended for really sticking to that mission, and pushing it, and pushing credit unions to adopt it. And kudos to the credit unions that have done so, because it definitely takes risk and an appetite for risk, and it definitely takes a willingness to step out of your comfort zone, as an organization, and make change, which is hard. There are a lot of things that give these credit unions reasons to say no, and to just continue to do things the way that they've always done them. But for those credit unions that have really made that commitment, really made the realization that this can be transformational for them and the communities that they serve, the proof is in the pudding, without a doubt. So really, really awesome, and it's exciting to be a part of that work. It really is. And so we are coming up on the end of our episode here, and the questions that I've been asking our guests to round out each episode, at least for the time being. This may change over time. Are these two questions? So number one is, what is most discouraging to you about the credit union industry right now? And then what is most encouraging to you about the credit union industry overall right now? Go ahead.
Well, they're polar opposites of, I think, one common thing of, who are we? I am discouraged when credit unions act like banks. It's discouraging for me. I think that's what's going to bring up the taxation issue again and again and again. And I totally get it. If a large credit decides we got 10 million in our marketing budget, we're gonna name this NBA stadium. Great, good for you.
Mhm.
But I don't know how many other nonprofits are naming stadiums. So it brings in the whole question about nonprofit and are we really living our purpose? So that frustrates me. I'm extremely frustrated, and I'm not an attorney, but when I read headlines about some of us being accused of redlining and some of us accused of predatory courtesy pay fees, that is not who we are, and I lose a lot of sleep over that, and I think ultimately those things, it's what people are reading in the news, and we can say, oh, but that isn't fair, and it's what our consumers on our target market is reading in the news. That is hurting credit unions, and for those that feel limited and constrained by credit union purpose and who we are, change charters, become a bank, pursue your dreams. That's awesome. But
Yeah.
but you hurt the rest of us, in my opinion.
Yeah.
On the other
Mhm.
side, what gives me so much hope is the the credit union helping people of modest means, credit unions helping communities and making a big difference is alive and well. And so when people are hearing that, oh, get in line for your merger and acquisition. But usually the people making those calls are consultants that are selling mergers and acquisitions.
Yeah.
There are credit unions. Why in the hell would some of these credit unions are so successful merge away? They're
Right.
they're demonstrating in their market they're relevant. They're meeting a need,
Yeah.
right? They're growing.
Yeah.
And so I see those and I'm excited by that. I'm excited to see some of our partners grow. CULA, it's been just a blast watching them grow. This year,
Yeah.
Nell Cup, first time I've hoped to see an I-10 school for so long. That I-10 school this year was wonderful. It was outstanding. So
Mm.
I do love seeing the focus from many different stakeholders, a focus on helping smaller credit unions. So
Yeah.
that's the the good and the bad at
Yeah.
50,000 feet.
Yeah, yeah. No, very well said. And Scott, just want to say thank you so much for taking the time, this afternoon and talking to me about all the things going on in the strategic planning world. Let's make this a regular thing, because I feel like our conversations are always great. And maybe, we didn't share some of the more risque things that happen at our planning sessions, but maybe risque is not the right word, but controversial, exciting. I don't know, the secrets
That
of
we can
the
definitely
planning world.
dedicate a episode to,
We
yeah.
need one. Yeah, we
Uh-huh.
need one. Yeah, we'll come up with it for sure. But thank you so much. This was really
Thank you.
fun, and yeah, we'll see you next time.
All right. Thank you, Tom. Appreciate all you're
All right.
doing.